Um, the senior housing industry has been obviously dominated for the past 12 months in the news, at least on the acquisition side, with healthcare REITs. Healthcare REITs have been doing a lot of acquisitions, almost $20 billion in the past 12 months. And I'm here with someone who is not one of the big healthcare REITs, but hopefully plans to get up there at some point in the next few years. I'm here with Sharon Yester. She's head of asset management at CNL Financial Group. And CNL is obviously, in our industry, very well known for the sale of CNL Retirement. You made a big splash in the last decade. You sold CNL Retirement in 2006 for over $5 billion. I mean, that was at the time, I think, the largest healthcare REIT sale ever. Are you thinking about working the same magic again?
Well, I think we have some magic. I think our magic really came from the fact that we've got a great company. We've got a great group of broker-dealers that bring capital in for us to invest. We've got teams that know their business and know the relationships. We had a great pipeline, and we intend to leverage those relationships again. I think it's going to be very fruitful. At the NIC conference, we've met with several of those folks. We've been getting calls over the past month or so that people now know we're back in the space, and we intend to remain there. And I think it's going to be great.
And is the CNL structure pretty similar to in the past, where you're raising equity on the retail side? In the past, it averages of $20,000 to $25,000 investment, expected dividend yields of 6 to 8%, close out the fund 5 to 7 years. Is that all pretty much going to be?
That's pretty consistent. That's been CNL's plan in most of the large REITs we had before. It's worked very well, and that's the plan again going forward.
Okay. And you've already done 2 transactions with Sunrise Senior Living. Those have closed. How did they come up? Did you contact them? Did they contact you?
As you will recall, going way back about 10 years now, we had a very good relationship through our hotel group with the Marriott folks. Marriott at the time had Marriott Senior Living. Marriott had determined they did not want to remain in senior housing anymore. They really wanted to focus on their core hotel business. And so we partnered with them to take those assets from them. We bought the assets. We found a good relationship with Sunrise to take over the operations of them and made a very smooth transition at that time. Since then, even though we did sell our Sunrise assets in CNL Retirement Properties to another REIT, we've always had a legacy relationship. In some of our smaller funds, we've remained close to the Sunrise folks, have some Sunrise assets that have been there. So it was pretty obvious at the time we were going to get back into space for both Sunrise and for us that this would be a great time to launch it on a larger scale.
Okay, good. Now, Sunrise, as everyone knows, has some very high-end properties. I mean, they were kind of known for that.
Yes.
So you're kind of making a splash back in with that. Are you going to focus more on the high-end, or that's just coincidental because of the start with Sunrise?
Well, I think it's coincidental to the extent that Sunrise builds and operates very well the high-end product. The mansions, which were primarily what we bought in that first portfolio that we acquired, is the Sunrise purpose-built mansions. They have a operating style that works perfectly for that. They know the markets. We had 3 major metropolitan markets that really house most of those assets, being the New York, greater New York, New Jersey area, Chicago, and then some in Los Angeles. So yeah, we like that particular Sunrise model, but we also like regional operators, as evidenced by a recent acquisition we made with some folks in Springfield, Missouri. I think the Heartland has a lot of folks. They need assisted living also. They like senior housing, and we like the operators who are in their assets every day living in the community.
So are you going to be looking primarily for some small to mid-sized portfolios? Will you do onesie-twosie acquisitions?
It's very difficult for a REIT to do onesie-twosies, so to speak, but there may be a couple of large properties that might come to us in a package that, based on the dollar value, would still make a lot of sense to us. Typically, we like to see portfolios 3, 4, 5 assets in there with a strong operator who's got a proven track record. These properties are stabilized. That's probably our sweet spot from the bottom end.
Okay, so that's going to be under the radar of the huge healthcare REITs.
I think so, by and large. Yeah, I think so. It takes the same amount of time to do a transaction with one property or with 20.
Absolutely.
A little more due diligence is all.
And you already mentioned the Heartland, and there's obviously a lot of opportunity there. Do you have any geographic preferences, or are you going to be national?
I think we would go nationally. Certainly there probably are fewer opportunities in Alaska and maybe Montana or Wyoming, although Montana's not a bad place to be in the summertime. But yeah, we would go nationally. You know, I think we'll stay in the lower 48 pretty much, but.
And all these acquisitions going forward are going to be in the new REIT which you launched, C&L Properties Trust.
The majority will be in C&L Properties Trust. We have some funds yet to put out to work in C&L Lifestyle Properties, but we do have a pipeline of things working there, which includes senior housing.
Okay, and I'm assuming you're pretty much going to be focusing on the assisted living, independent living side. Any interest in skilled nursing?
Well, assisted living, memory care really is our sweet spot. Skilled nursing is not on our radar screen, and I think because there's a lot of volatility, at least perceived volatility in the Medicare venues, we're not looking to do any business there. I think maybe 2, 4, 5 years down the road, when things kind of settle down across the country and the economy, we may look at some opportunities, but that is not at all in our focus or even in our thought process. Independent living has struggled some, but that may mean there's some great opportunities. And we have some independent living facilities where we've actually done some conversions, added this AL.
Right.
So yeah, but it's mainly assisted living, Alzheimer's care, and some medical office. We'd be wide open to medical office. We've done that before. We know what we're doing.
And how about on the debt side? I know you're going to be raising a lot of the equity on the retail side. Are the debt markets, do you feel them constraining you at all, or with the amount of equity you're going to put in deals, you're going to have no problem with the debt side?
We have not had a problem. We've always performed well for those that you know come in on the finance side for us. We have strong relationships, Sarah. We've met with a couple of groups recently in Orlando. We're working some opportunities, and they're right there alongside with us. They've always taken good care of us, and we've always taken care of them. So I don't anticipate any problem there.
Good. Well, that's great to hear in this kind of market.
That's what we told them.
and then from a competitive perspective, I mean, the big REITs are obviously going after the $100 million to multi-billion-dollar portfolios. You're on the smaller side. Who are you competing with?
I don't really see us as competing with anybody. I mean, not that it's not a competitive marketplace, but I think what I'm finding is that people that have assets they want to sell and continue to manage back or lease back really are looking for a relationship. I think that probably gets tougher for the folks that maybe have the smaller portfolios to do business with the large guys because they're not as able to pick up the phone and talk as directly to the folks in charge. And we've always believed that relationships transcend transactions has kind of been our mantra. And you can pick up the phone and call us, and we can call you back and say what's happening if you're struggling a little bit, like a lot of folks did in this economy. So it's not our deep-throated lawyer calling you. We're calling and saying we need to talk. Can we work some things through, and let's get it done here.
And how are you getting these things done? I mean, you did the Sunrise deals, were I'm assuming direct deals.
Yes.
How are you finding your acquisition opportunities? Are you out searching, or are the brokers calling you?
Well, other than the great opportunity to meet with people at NIC, which we obviously everybody does, we all do that, we're getting a lot of calls. We're getting calls from folks who've dealt with us before, from people they've talked to and said it was a great experience. Other people that have come back to our team, such as Kevin Madron and some of his associates, have kept active, even though some of us were locked out for a few years, and they know the people out that are looking for good deals. So we've had a tremendous amount of reception, a lot of calls, a lot of people we're meeting with at the NIC conference. I don't see a problem finding a great pipeline.
So the pipeline is starting to build.
It's building up, and we're increasing our bandwidth.
All right. Well, very good. I wish you success, and hopefully there'll be a lot of transactions for us to be reporting on in the next year or two.
I think so, and we'd be glad to speak to you about them.
All right. Thank you very much for sitting down
You bet,
with me.
Stephen.